For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Basically yesterday, the Fed raised, as you know, interest rates in the United States by 0.25%. So stocks really mixed as far as Asia Pacific's concerned. Hong Kong up about 1%, Shanghai Composite up marginally, but basically people not any much the wiser about where the Fed's going. I'll come on to that in a moment with the US wrap. But first of all, let me then now take you to China and Tencent, which is the tech giant in China. It's recorded the first online ad revenue increase in over a year. Ads are still only a fifth of its revenue, but nevertheless, that sort of points towards a tech market which is actually getting very slightly better. Shares up by 5.8%. On that, so the stock market, the investors clearly like that and are going along with me by thinking that maybe this is a revival of the tech slowdown. China, Russia, as you know, a summit took place. They have affirmed their economic cooperation with each other. Unfortunately, the details of that meeting between the two premiers is still to be either publicized or worked out. It all very general, but the sort of thing that they're talking about was energy, food security, and so on, and maybe cross-border infrastructure projects as well. But again, very vague, very short on detail. China staying with them, and the Evergrande. Now, you didn't know this, did you? Or maybe I certainly didn't. I wasn't particularly aware of it. But Evergrande, the property company that's in a great deal of trouble in China, does have an electric vehicle, an EV division. They think they may halt production. It's done 900 cars at the moment. It's short of money. It's asking for more, just as Evergrande, its parent company, Evergrande Group, is trying to restructure its debt. Its target is for 1 million vehicles by 2025. And it's seen as a key element, the EV business, in terms of Evergrande's transformation from being a property company to being an industrial conglomerate, which is what it wants to do. Right, to the United States then. So, as expected, 0.25% increase in interest rates there. Although this is the 9th rate rise since March 2022, the Fed, Jerome Powell, was slightly dovish. There is a feeling that maybe this cycle of just given interest rate rises is about to slow down very slightly. The rate rise, the rate level towards the end of the year might be about 5.1%. That's what people are thinking right now. And add to that, the US Treasury Secretary Janet Yellen was absolutely clear before her evidence to a Senate committee by saying that there won't be a blanket insurance stroke bailout for smaller federal banks getting caught up in the banking crisis. She was just making that clear. The dollar has edged slightly lower on expectations of a slight pivot from the Fed from its normal hawkishness. Credit Suisse, I thought there would be trouble here. I said this yesterday, and indeed there is. The US bondholders who are saddled now with the AT1 debt, or COCOs, contingent convertibles. In other words, after the 2008 financial crisis, it was felt that people who want to invest in banks, they need to invest in the bonds as well. It stops taxpayers having to pay for the collapse. So Credit Suisse bondholders are actually suing the Swiss authorities for what the Swiss authorities do was put their shareholders first and left them effectively wiped out about 17 billion dollars worth of bonds. Shareholders got about $3.5 billion. Macron in France is standing firm against the nationwide strikes which are promised today as a result of his pension reforms. What he wants to do is bring the pensionable age from 62 to 64. And also, if you want to take a full pension, you need to have been working for 43 years, full state pension that is. It gives about 13%, France does, of its GDP towards its pension fund. Average of the EU is about 10%. And you can see why Macron is worried about the financial crisis that may well result towards the end of the decade. UK, that surprise jump in inflation yesterday poses a huge problem for the Bank of England. Well, why not? That's what they're paid to do. Do they raise interest rates a 0.25% today? Do they do nothing? Do they raise them 0.5%? Well, we'll know at midday, our time and your time 1 o'clock today. The inflation rate rose to 10.4%. I said yesterday it was about food. I was mistaken, as were most of the commentators, because we didn't have the figures in front of us. Now you look at them, this is about domestic price increases all the way across the board. So it can't be blamed anymore on the international thing. It's about our economy. And this is something the Bank of England needs to address. It looks like Manchester United may well be sold to Jim Ratcliffe, who's the billionaire owner of Ineos, the chemical conglomerate. He's offering £5 billion for it. I mean, this is not just a rebuild of Manchester United's worldwide marketing reputation. He'll need to rebuild the ground as well, which is actually crumbling. Old Trafford is not what it used to be. And certainly when you go to other grounds, friends of mine who've been to Old Trafford recently, unfortunately I haven't, but friends of mine who've been there say that the infrastructure really needs a big increase in money. If it goes for $5 billion, it'll break the previous record, which was set by Rod Walton, who's the Walmart heir, who bought Denver Broncos for $4.6 billion a couple of 4.65 billion, and shares in Manchester United rose 6.7% on that news. To commodities, and oil is tracking lower after the Fed, the feeling that the Fed's about to pivot. WTI shed about 1% yesterday. Gold could test its highs. Its highs is just over 2,000. It could be testing that high as bank stocks continue to wobble slightly and inflation continues to rise as it does, and the Fed is a long way away from its target, as the Bank of England is, of 2%. And finally, Bitcoin. Now, here's the thing. Is it actually now re-emerging as the new digital gold? It could, I emphasize could, reach $100,000 by the end of 2023. It's rallied 70% this year, and it's certainly outperforming stocks, and it's also as a result of SVB. It didn't crumble when SVB did, and now there's a feeling it might be a place to put your wealth. Well, you pays your money, you takes your choice. That's the global view.
Right. Thanks so much, Michael. Real quickly, I'd like to, if we get a chance to ask, we got a chance to ask a couple of questions. America is increasing interest rates again, 0.25%. The initial banking crisis, part of the reasons, apart from regulatory shortfalls, was because of higher interest rates. Should the banks be panicking in America?
Well, they shouldn't be. They should have read that in. I mean, there was a question, wasn't there, as to whether the Fed would sit on their hands and do absolutely nothing and then wait till May. I think that they had to weigh up whether the fight against inflation and the contingent collapse of various federal banks in the United States was the more important. Which one of those two issues is the more important? And I think that given the noises that we've had from the Fed members who seem to speak out quite freely and have been doing over the past month, it was pretty obvious that the Fed is concentrating on inflation and concentrating on the job market as well. And for the moment, the banking crisis, such as it is put into second place behind their fight against inflation. Now, whether or not you think that's a good idea, certainly the banks got caught out as far as interest rates are concerned. I have to say, though, honestly, who did not know that interest rates were going to rise? Didn't the banks write that in? Why did they not know? It takes an SVB for everybody to be looking at these kind of things and then saying, oh, yes, it was a rise in interest rates that did it. Oh, come on.
All right, very quickly, Michael, the Evergrande offshore debt restructuring. I just wanted to get your thoughts on how the impact on the Chinese property sector. Already there were concerns in that area, so I just wanted to find out from you in terms of contagion and what that would imply for other merchants in this industry.
Evergrande is an absolute firm peg as far as the China property market is concerned, which again is very, very important to their economy. We know we've been over this. It does seem like years now talking about Evergrande and problems and so on. It's trying to restructure its debt. You can see the transition pains coming right now. Its EV division, which is, as I said, supposed to be key to its survival, may well now have to stop production because it's not getting enough cash. Whether Evergrande itself survives as a property company, I have my doubts about that. I always said, when we talked about it before on this program, what I thought was going on in the background was a very, very, very gentle dismantling of its property sector, moving towards its transition, or as they call it, its transformation into an industrial conglomerate, which is mainly dependent upon electric vehicles, which have a huge potential market in China and indeed, of course, in the rest of the world.
We're talking about the U.S. and the FOMC. Wells Fargo Securities, speaking through Michael Chumica, the head, says, in fact, the big risk ahead in the U.S. is financial instability, contrary, to the expectation that maybe the banks will not be affected, and that we should expect more aggressive interest rate hike in the U.S., contrary to the FOMC saying that, what will happen will be more aggressive policy firming, which some people have interpreted to mean that there may be no more aggressive rate hikes. But I wanted to ask you about the Bank of England. Yesterday, inflation went up in the UK to a surprising accidental 10.4%. What should we expect from the Bank of England today? Because even yesterday, the Chancellor, Jeremy Hunt, was saying that, look, this is dangerously high, and that by the end of the year, Bank of England will have to have inflation, which is the objective of the Sunak administration. Today, is the Bank of England likely to also hike rates?
Yeah, I think they will, and I think they'll put by half a percent. I could be sticking my neck out here, but why not? And tomorrow, of course, I may be wrong at noon, but I think they will. And what their thinking will be that it does take a long time for an increase in interest rates to actually take effect. What it will show, if they do that, is to show that their fight against inflation is very, very hard indeed. It's impossible to predict how big the banking crisis, such as it is going to be in the UK. The Bank of England has been saying quite loudly and publicly since SVB that the UK banking system is safe. Perhaps it is, who knows? But I think what they do know is, given that big jump in inflation yesterday, I guarantee you that what the 9 members of that MPC committee will be thinking to themselves, that's the most recent figure, and it's not about foreign problems, it's about complete domestic ones, and that inflation is right across the board. It's not just about food. Now, all that stuff may drop out, but I think they will still be online and on target to be hawkish when they will have made their decision. They probably made it already, actually, but when it's announced at noon today, I think it'll be 0.5%.
Well, thank you very much, Michael Wilson. Now, for business updates across the African continent, Rotus Udiri joins us. Good morning, Rotus.
Good morning, Doctor. Good morning, Ayo. Good morning, Rufai. Do you want to make a prediction on Bank of England? I think Michael says 50 basis points. I say 25. What do you think, Bank of England? What do you think?
I'm more like 25.
25. We're going for 25. All right. Queues are still very much coming to Nigeria now. Cash scarcity still very much alive and well. Still seeing queues at banks to get access to cash. However, what I'm hearing is that they've been instructed to go to the CBN to get old notes, and that should improve the situation. Hopefully this week. These are the whispers that the bank should head back to the CBN, get the old notes from there, and then because that's where they were, deposited, and that should hopefully ease the scarcity. But you can see lines still very much apparent around the country. Over to the win over in Abia State, with Abia and Enugu very much in focus. There is, of course, the focus on their economies. So we've already, thanks to budgets and the Bureau of Statistics, Abia's unemployment is one of the things that Mr. Governor-elect Oti, as the doctor already pointed out, is a banker, comes with a lot of experience. He's going to have to create jobs. 50.07% is one of the highest, I think it's top 3 or top 4 unemployment. You add underemployment, that's 56%, so almost 6 out of 10 people there. Inflation above where we are with the average. Their food inflation is at 25% for February. So you're seeing lots of costs there. Ease of doing business, 32nd out of 36. So they are way down there. Have to improve the business environment. They got about $56 million through capital importation between 2019 and 2021. But where is that being deployed? Abia State has one of the lowest healthcare spends in the entire country. Healthcare spend is only 979 naira, I believe, as well. Education is pretty low as well. And then this is another troubling number for Abia State. IGR is only 16 billion. There are companies in Nigeria that do well, way more than that. In fact, I think individuals, didn't somebody say they had 22 billion hidden in a house somewhere in cash? So for their revenue breakdown, only 21.5% of their revenue comes from internally generated. Almost 80%, 78.5% comes from FAC allocations. So if you're talking about a place that should be an economic zone that produces so much, they've really got to improve that. So as a former banker, I'm sure he's going to be looking at their debts, also almost 95 billion, foreign debt, $101 million. So they've got high debt, high unemployment.
He said that debt is over 95. In fact, he said over 100 and something billion.
If you convert the foreign debt at $101 million using the local exchange.
So it's like 170 billion.
Exactly. Add everything up. So you got high unemployment in Abia. You've got low revenue generation. You've got high debt. It's a lot of issues. But then Shehu Onigbinde, who is the head of, founder of Budget, he had some tweets, right, where he said, Abia workforce and months owed. Local government worker salaries, 3 months. I think absolute is the Abia State University Teaching Hospital, 13. Health management boards, secondary school teachers, primary school teachers, polytechnic workers, about 30. College of Education. Oh, sorry, this is months old, not the number of people, excuse me. So 3 months, 13 months, 13, 11. College of Health Sciences, that's source NLC, which I hear they're supposed to be going on some strike, but I've tried to confirm that. I haven't quite heard from
for the Naira's
Naira scarcity thing. I've reached out to exactly. Okay, he continues with more tweets from Olusegun Onigbinde. Mr. Alex Oti should please not move on. The world deserves to know what happened in Abia. 20, how many years of rule there?
24 years.
Absolute claims they were owed 24 months. He corrected that tweet. It's actually 23 months salaries and the doctors are on strike. Abia State Polytechnic accreditation was recently withdrawn. There has to be accountability. This is not normal at all. And then there was a reply from economist and banker Brian Ujefolo. He says, however Alex Oti can raise the funds, my advice to him is firstly, pay up these debts immediately once he assumes office. He shouldn't even bother to make excuses. In as much as he can verify the legitimacy of these outstanding remunerations, he should verify and pay up. How does he do that when you've got high debts, low revenues, and you're so disproportionately dependent on FAC? These are the challenges that await him. Quickly, Enugu, we also had a new governor there. Enugu's numbers are not as distressing as Abia, but I don't know if we have Enugu's figures, but Enugu's, if you look at their metrics as well, I think, so unemployment is 31%, just under the national average of 33%, but if you add underemployment, it's pretty high. Inflation, food inflation, double digits as well. Their GDP though, Enugu Coal City, 1.45 trillion, that is one of the lowest in the country. Ease of doing business, better than Abia, but they're 26th. But their capital importation is abysmal. According to budget, only $50,000 came into Enugu between 2019 and 2021.
What?
See, I mean, those figures are right. It is very, 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 very troubling. Them to IGR, only 30% internally generated, almost 70% comes from FAC. So Enugu, like Abia, disproportionately dependent on the federation money that comes from there. They also got high debt, 69 billion naira in debt. Foreign debt is $129 million. You join that together. So if, I know the Labour is going to court, whoever leads Enugu, these are the numbers we need for every governor, senator, House of Rep that's coming on. How do you turn these states around?
Well, hopefully we'll have Dr. Alex Oti respond to some of these questions.
He's coming on today, right?
Today, in a few
Grill
minutes,
him.
actually.
Grill him.
Well, thank you very much, Rotus, for your time.